When I first started investing, I honestly thought I was going to be the next Warren Buffett. I opened up my very first brokerage account, threw some hard earned money in, and fully expected to get rich quick. I pictured myself sitting on a beach, living off my returns in a matter of months. But instead of that dream reality, I ended up losing money, stressing myself out constantly, and making literally every single beginner mistake in the book. If you are brand new to the stock market, or even if you've been investing for a little while, you are probably going to make the exact same mistakes I did unless you watch this video. Today, I'm pulling back the curtain and sharing the 5 biggest investing mistakes that kept me broke. I want to tell you exactly what I was doing wrong, and more importantly, what I do differently now to actually build passive income and real long-term wealth. Real quick before we dive in, I am just a guy on the internet sharing my personal money journey, so remember this isn't financial advice. If you appreciate the transparency, please hit that like button and subscribe. Let's get into mistake number 1. Mistake number 1 was believing the myth that I needed thousands of dollars to start and trying to wait for the absolute perfect time to jump into the market. For years, I told myself I would start investing when I finally got a raise at my job, or I would tell myself, I'll wait until the market crashes so I can buy in at the absolute bottom. The reality is, waiting on the sidelines out of fear or lack of funds cost me years of compound interest. I learned the hard way that time in the market always beats timing the market. Even the smartest financial analysts in the world cannot accurately predict exactly what the stock market is going to do tomorrow, so why did I think I could? Furthermore, you don't need $5,000 to start investing anymore. Thanks to fractional shares on modern brokerages, you can literally start investing with $5. The absolute biggest mistake you can make in your financial journey is simply not starting at all because you think you don't have enough money. Mistake number 2 was buying hyped up stocks just because everyone else on the internet was doing it. We all remember the crazy runs of meme stocks and the massive hype around certain tech companies. I used to go on social media, see someone bragging about doubling their money on a random company I had never even heard of, and I would get major fear of missing out. So I would blindly buy in at the absolute top of the hype cycle right before the stock completely crashed. I wasn't researching companies, looking at their earnings, or understanding their business model. I was basically gambling, not investing. Now I completely ignore the hype. I stick to companies I actually understand, and I focus heavily on broad market index funds like the S&P 500 and dividend ETFs that consistently perform well over time. They might not be the trendy, exciting things to talk about online, but slow and steady is what actually builds millionaires. Mistake number 3 was panic selling my investments the second things got scary. There is nothing more terrifying as a beginner investor than logging into your brokerage account and seeing a massive sea of red numbers. The first time the market took a big dip, I completely freaked out. I let my emotions take over. I thought the economy was collapsing and I was going to lose everything I had worked so hard to save, so I sold my investments at a massive loss just to keep whatever cash I had left. Literally a few months later, the market bounced right back to all-time highs, and I missed the entire recovery. I realized that unless you actually click the sell button, a drop in your portfolio value is just a paper loss. It's not real until you actually sell. Now, when the market drops, I don't panic. I have completely rewired my brain to get excited because a red day simply means my favorite high-quality stocks and ETFs are basically on sale at a discount, and I use that opportunity to buy more. Mistake number 4 was ignoring dividend investing entirely. When I first started out, I was completely obsessed with capital appreciation and growth. I only wanted stocks that were going to shoot to the moon and double in price. Because of that, I totally overlooked the power of dividends, which is basically a company paying you hard cash on a regular basis just for owning their stock. Once I discovered dividend investing and dividend ETFs, my entire mindset changed. Instead of just crossing my fingers and hoping a stock's price goes up so I could eventually sell it, I started focusing on building a reliable, growing stream of passive income. Seeing those small dividend deposits hit my account every single quarter completely changed the game for me. It gave me a tangible reward for my patience, and I just take those dividends and reinvest them to buy even more shares, which creates a massive snowball effect over time. And finally, mistake number 5 was being completely inconsistent with my contributions. I used to invest a big chunk of money, maybe from a tax refund or a bonus, and then I would stop investing for 6 months. Then maybe I'd throw a little more in when I felt like I had some extra cash lying around. Because I wasn't consistent, my portfolio barely grew, and it felt like I was running in place. The secret cheat code to building wealth isn't picking the perfect stock at the perfect time. It is automation and consistency. It's called dollar cost averaging. I finally set up my brokerage account to automatically pull a set amount of money from my checking account every single week, no matter what, and invest it directly into my chosen ETFs. By automating my investments, I took my own lazy habits and my own emotions completely out of the equation. Whether the market is up or down, I am buying every single week, and my portfolio started compounding faster than I ever thought possible. Investing really doesn't have to be complicated, and it honestly shouldn't be stressful. If you can manage to avoid these 5 beginner mistakes, buy quality index funds or dividend ETFs, and just let compound interest do its job over a long period of time, you are already ahead of 90% of people out there. Let me know down in the comments what your biggest investing mistake has been so far. I would love to read through them and hear your stories. If you got value out of this video, please don't forget to like, subscribe to the channel to follow my personal investing journey, and I will see you guys in the next one.